Yeah, it's working. Cool, I think. You guys hear me all right? We're gonna let people get in here and then we'll begin. Morning. We'll give it like a couple more minutes, and then we will go in. Sound is clear. That's good. All right. Well, shall we begin? I shared it with Telegram and Discord, so I think that's good enough. Good night. It's 4 p.m. here for me. Not even nighttime yet. Go over daily bias examples. Yeah, we can. Do you have a asset you want me to look at? Or we can talk about framing stuff on the daily chart. I'm in Europe. Yeah. I've been in Italy for the past 2 months. I'm going back to the States in like 5 days. More like 4. I have another trip to going to Venice tomorrow. Then I come back to Lake Como and then Milan to fly out. Let's see, not trading related. Why don't you reveal your face? Well, I'm early 20s. That's my age. And then, I don't know, do you want your mom to believe you? I'm just trying to be kind. All right, let's talk about who was asking about daily bias. You have a chart that you want to talk about? 4 p.m. sounded like you just woke up. Yeah, I can do my YouTube voice if you want me to, but it's gonna be a chill stream. NQ. I mean, we can go over this previous week's bias if you want. Is that if that's what you want to do? I want to know how you stick to your rules. Well, eventually you lose enough money not following your rules that it makes sense to stick with them. But yeah, we'll talk about NQ, right? So NQ, it's fine to anticipate upside here, right? Going into the new week. Let's move this so you can see the time. All right, so Friday, we're ending the week. This is a very slight bullish candle, right? If we go to a 1 week chart, right? Cool. And notice, right, we have a swing formation right here, right? A new protected swing. You've seen my protected swing video. This is a new protected swing. So we can anticipate this to trade higher, right? So this is candle 1, 2, 3, 4, 5. I'm not trying to trade after 4 candles in a swing because that's when we can get a new phase of price. So generally when this is occurring and we're taking out highs, I'm favoring a look back into the range because I want to trade when we form new swings, right? That's where the opportunities lie for me. So when we trade higher here, there's no interest for me to be trading this back or trading this higher, right? And it's a bit clearer on ES, so we'll go there because that's what I used to frame the Tuesday short, right? So same thing, right? Swing, candle 3, 4, now we're in 5, 6. Now we have a candle 2 closure this way. So this is when I can be looking to trade back lower, right? And how else does that make sense? If you've seen my low resistance or high resistance liquidity video, right? We have these previous day's lows all lined up. That's low resistance liquidity, right? So that can give our daily bias bearish, right? We let a day pass if it's gonna let us. And there we go. We go lower, right? But what do we notice? We haven't hit this target ideally yet, right? So then, because we've closed lower, we can anticipate this next day to go lower as well. And it does. That's great. Now we notice if we are anticipating this trend to continue higher, which is what makes sense, it's the same thing here. I want to wait for a swing to form, and then I can trade this in the other direction. So now we have a candle 2 closure, bullish, and I can anticipate this to trade to the high. So we'll go to the hourly just because I want to explain this. And we'll do this. You see my indicator will give this bearish bias for this next day. That's what we were talking about. And then on this following day as well. But now we have this reversal, right? Which you'll see in my next week's video. But we have expansion met with expansion, protected swing. This is then valid to trade it higher to the highs, right? And you can see it prints. But this already hits the target, right? Prior to the session. So that is when, if you take a look at NQ, right? NQ is already propped way above those highs. It's not very correlated. This is where you can either use the intraday profile, where I've talked about, I threw up a post on Instagram as well, where when we just expand away from the daily open, that's when you can favor shorts back into the range to the daily open, right? Or you can just let this day pass, right? You can get this day, or you can let it pass. When it closes, then what? Now we have a very clear daily bias, right? So if we just go back to the daily chart, we're just waiting for swings to form, right? So we had bearish swing here. That gives us a continuation day lower here. We could anticipate lower here, right? Forms a reversal, can look to trade that higher. You can use intraday price action to trade the reversal day, or you just let this print, and then you can anticipate this day lower as well, right? So if we go to NQ, it's a bit easier to see all these failure swings and those equal lows there for that target. Does that make sense for the bias? Just on NQ. Let me scroll back up in the comments. So like really all I do is look for swing points. That's it. Any discounts for the TTFM indicator? I mean, I can throw up a discount quick if you guys want. Let me grab go ahead and go here. And then code, and there you go. There's one. Let's see. Do I trade news? I don't trade through CPI, FOMC, or NFP, but besides that, I don't really care too much. How would you frame GC for the upcoming week? So that's something I don't do. Is like say, hey, this is my bias for the week. Because think about this, ready? Going into this week, what was I anticipating? A retracement lower to then just trade it higher, right? But I use each new day's data to tell me, right? So if I let Thursday print and I say, my bias this week was bullish, I'm not going to take this short Friday. That doesn't really make sense, right? So I never go into the week saying, hey, I'm only going to be looking longer, I'm only going to be looking short. I just look for the previous or the next day using the previous day's data, right? So if we're here on gold, right, like I'm not a huge fan of trading this Monday here because we have had such a large expansion, right? So mechanically, I could look for the upper half of this to support and then trade it higher, right? But for me, I'm not a huge fan after trading after expansions, right? I'd rather let either a swing form to trade it back into the range or let a retracement form to then trade it back higher. That's how I prefer to trade it. So for gold, yeah, it's bullish, right? But we're also just stuck in this range. You can see the range. So it's not super interesting in here. Like I'm not super confident on the directions, right? The monthly chart isn't giving much clarity either. Let's see here. Any discount on the Lens membership? No, there is not. We sometimes do discounts like once or twice a year maybe, but that's it. So in hindsight, you avoid Mondays. I only will look to trade Mondays if Friday forms a reversal. So let me see if I can find an example of that. I don't think we have one right here. Maybe. No. But like for instance, we'll just use this. let's say for instance that this here is a Friday, right? I can look to trade Monday this next day because I have point of interest, a sweep, and a closure, right? So then that gives me a bias to trade this lower on Monday, right? Yeah, it is Monday, so it's Tuesday. So if we go down here to the hourly, right, it'll print that short setup, right? Does it work? Yeah, right. But that's the only way I would trade it, is if Friday has a reversal and then Monday allows that continuation entry. Besides that, I just avoid Monday. What do I think about first presented fair value gaps? I don't use them. I don't even really, I know they're like the first fair value gap in the New York session or something. I don't use it. Can you show us where you would take an entry after top-down analysis? I can go over some examples. Right, so I keep it very simple. Right, let's we can go to like ES, something like the 15-minute. There's a lot of different ways you can do this Thursday. Right, but similar on Thursday, we hit this target, we have a reversal off of it, 4-hour candle closures like that. And then all you would do is you use my protected swing and stop loss video. If you use that, in here, it tells you where you have a stop loss, and then you can just position for that. Right? Okay, let's go to Friday, for example, 9:30. Where are we at? 9:30. All right, let's go to something like the 5-minute. All right, we come into 9:30. What do we have? We have a reversal, closure below. We're not expecting price to return up there if it's going to expand lower. Right? It takes a minute. Not great. And that's why the 3-minute was a bit cleaner. Go look at that. Right? But all I'm looking for is reversal candles, and then looking to position myself in the continuation with my stop at a protected swing. Let's say NQ and ES made an SMT with C2, but NQ didn't. Which should I trade? You trade the weaker or the stronger one. If I'm bearish, I'm looking to trade the weaker. If I'm bullish, I'm looking to trade the stronger. View on USD JPY. I mean, yeah, let's see. That's lower. I mean, like I said, I'm not a huge fan after trading after large expansions, but that's not currently respecting 50% of this, which usually means this low is going to get taken. So it's really just that would be my target. And actually, like on a monthly basis, that low. So this is a reversal, and then we start to form another protected swing. This can be a nice continuation lower. That's just based off the fact that we open up the new month, we sweep the previous month's high. If we're going to fail that side of the range, then we can trade to the lows. Euro USD. I mean, it's kind of the same thing as USD JPY. It's just that reversal off of the previous month's low. Right? And then if you're going to trade reversals off of a previous month's low, that's going to also be here, this previous day's low. So the only way for me to anticipate that is I'm not getting this move because it's NFP, but how I would actually frame that is I'd go and I'd say like this. Okay, we dig into this low and we formed a protected swing. Until that occurs, it's bearish. Obviously you see how it does it so fast, but we make a new low. But then once it closes over that level, then this low is protected and it trades away. So I don't use quarterly theory. Do you trade something else besides NQ, ES, GC, NCL? I'll watch currency futures as well. So many of you guys are caught up on trying to like catch NFP moves. A bit weird. What should I do to get my ban lifted from your Discord? Well, usually if you get banned, you got your account hacked and then were spamming malicious links, or you did something against the rules, so you don't really get unbanned from the Discord. You trade after daily C2 close? Yeah, that's the easiest way to trade. You don't have to wait for a daily C2 to close, but it's the easiest way. Three drives patterns? I mean, it's very simple. It's just, let's see if I can find one for you. I have a very specific way of viewing three drives. Maybe I'll make a video on it, but it's pretty simply this. It is like something like this, or that has it as well, where you have a stab at a low, closure back in. It fails, you get another stab, then closure back in, then it can go. And so stab, closure back in, another sweep, closure back in, then it can go. That kind of makes sense. That's how I view it, at least. Someone was talking about macros. I don't know what macros are. I don't use them. Can you show us what currency futures are? Yeah, I mean, all it is, so like if you want to look at euro, it would just be 6E. That's going to be the euro futures. So like this is, okay, this will match euro USD because they're both paired against the dollar or they're correlated. But something like, we go to 6J, right? So that's like the yen. And then you go to USD JPY, because that is not correlated, it'll be opposite. Right? So it's really used if you want to trade Forex without actually trading Forex, you're trading futures. Or if you want to know how to pair currencies together when the dollar is consolidating, or to see relative strength and weakness. T, how do you avoid situations when the expanded C3 forms into a new C2? You just need to send me an example of what you mean. Why is it unlisted? Because if you're in the Discord or Telegram, you get a live stream. If not, you don't. That's it. Yeah, so three drives would be essentially you have a C2. This is basically a three drives pattern here. Let's go to this. Right? So let's take a look. So let's let this candle close. It's a good example. All right, three drives. It is where we have a candle 2 closure that fails. So we have a candle 2 closure here. We can mark out a previous day high. We have taken it out. Do we have that change in the state of delivery? No. The price is still bullish, right? So then we mark out our previous day high again. If price is still bullish, it'd take the previous day highs again. Took the previous day high again, right? Now you'll see my model print, right? Prints the short setup. So all the three drives pattern is it's a C2 that doesn't have the confirmation in the lower time frame, or it fails, right? So it doesn't get this closure. So it's a 1, 2, 3. Right? That's the reversal, and then the continuation follows that. So in this case, where's my protected swing? Here. You could consider that, not as trustworthy of that, but really, I'd want to see price do something like that. Oh, nice, cool. There we go. And I can shorten there. Why did I expect that on a random asset I never watch? Well, let's take a look. I don't want to see price trade up here. That invalidates it. We have a protected swing here from closing over that. This you could kind of consider a protected swing because it stabs back into this level. There's no fair value gap or anything there. So that's the level we can see. Here we open, we trade lower first, which is not what you want to see. So I'm not considering this high to be protected. We just took out a target. It can allow for further retracement. So further retracement means we sweep out this and go lower. So then all you do is you can sit there. Once we form this high, then I can trade this short into the targets here. There you go. 3 drives and kind of a top-down analysis. Make sense? Do you still consider the trade if the equilibrium of the body of C2 breached, but not the equilibrium of the C2 wick? Well, it depends on what the C2 looks like, because that depends if I draw from the body or the wick. Yeah, this will be up. If you have the link to it, you can view it whenever. I'll keep it up. It's just not going to be like publicly on my channel, because this is not like just chill and casual. I'm not trying to like put in the work right now. What's the difference between GXT and your model? Well, GXT is this. So when GXT, that's Garrett X TTrades. So that's Garrett's, which is H4 profiling and some SMT stuff, among other things, mixed with the fractal model. So that's what it is. So if you don't understand my fractal model or have that mastered, then you're not going to understand GXT at all. Let's see. The T-spot could be an OB fair value gap. It's just a point of interest inside a location. I talk about it very in depth in my course, but that's the PDF I dropped today is kind of what you're going to get out of that. 930 Judah swing. I think people make it a bit complex. Let's say we have a bearish bias going into the day, and there's a few scenarios. Ready? We're gonna have a bearish bias. We come in. Let's say London makes a high a day here. Right? We come in. We're just looking for 8:30 and 9:30 as those driving times. If 8:30 creates a protected swing, right? Then do I expect 9:30 to also come back up and take that out before going? No, I just expect that to drive lower. So if 8:30 manipulates, then we expect it to 9:30 to drive. So sure, you can call this a Judah swing. You can call it whatever you want. In my eyes, it's just, oh, we form a protected swing. 9:30 can expand away. Don't make it so complex. Okay, let's say 8:30 does nothing. Now what happens? 9:30 comes in. That's when 9:30 can manipulate before expanding. Right, so 9:30 can either manipulate and expand, or it can manipulate, protected swing, 10 a.m. expands. Right? Or there's different daily profiles. Let's say we consolidate, 8:30 makes the manipulation, 9:30 continues that. Consolidation into New York, 8:30 doesn't do anything, 9:30 manipulates and expands. 10 a.m. we either get a reversal back up to these failure swings, or we get a continuation. So it's like, don't make it super complex. Just study those times and how they work together. All right, let's see. Do you prefer C3 or C4? Candle 3. How do you access your course? Monthly or one-time payment? There is a monthly, quarterly, and a one-time payment. If you check the description of this video, it's on there. Where would you enter a trade or put a stop loss when price is aggressively expanding without retracements? So yeah, let's just use this as an example. The price is moving aggressively or expanding. I'm either not going to get that on this time frame, or I have to go to a lower time frame, like a 3-minute, a 5-minute, right? If price is going to be trending, the only way to really catch these are letting swings form, right? In which case, a lot of times they don't. But if we had a swing form there, then I can trade this falling candle, right? Or something like this. There we go. We formed a swing. I can trade long into here with my stop there, right? There's just trending entries via swings. So candle 2 closures on a lower time frame. But I'm not a huge fan of, like, people will say, oh, I'm going to trade this. Sure, that's great. Do what you want. Price already expanded, you know, more than the average daily range. Sure, go hit your TP. Let's say you're at 2R. That's fun. Right, like it's just something I'd rather not trade a lot of the times unless we're really trending. NQ is kind of a better example. Or ES. We'll go to something like the hour. If we're just going to be trending aggressively, that's where your understanding of open, high, low, close comes in. Because if we have an expansion candle that then closes, if this next one's going to expand as well, once it forms its upper wick, then you can get on side with your stop there. I'll let you guys study that. How about protracted London and failed swings? I don't really know what you mean, protracted London. Is there any updates coming to your indicator? What can we expect? I can't give it away, but I listened to all the feedback, and there's 4 or 5 updates I'm working on right now. The first one will be the most requested feature. Then I have a few other ones coming along. I don't trade every day. Some people do trade every day. You can just do what you want. How do I align daily, hourly, 5-minute fractal model with time? I don't know what it is with ICT people always trying to like make time to be such a huge deal. They're like, time this, you don't align with time. I genuinely don't really know what that means. For me, once we have formed the daily high or the wick, right? If we're going to expand, we're going to continue to just expand until we hit our average daily range or target. I don't really care when this is. Once we form a model, like, okay, 8 a.m., cool. Right? If this was at 6 and we do the same thing, that's cool too. I don't really care. Like, it's not a big deal for me. I just let the daily wick form and then trade the body of it. Like, it's not that deep. Like, sure, you guys can go into the circle logo or whatever it looks like. This, you know, you guys can go find some random stuff in there. I'm just going to let a candle form and trade it. What is narrative? It's just basically ask yourself a question each day. Is price going to trade higher or trade lower? Once you decide higher or lower, where to, right? Or you can use that as the same thing, right? So obviously with my little indicator here, right? It prints it out and says, hey, it's bearish. That's great, cool. Where could I trade to? I need to go to the higher time frames, right? From there, I can say, all right, previous day's highs and lows. There's one, there's one, there's one, there's one. These can all be points of reversal, but how many of these are actually relevant? This one could be relevant. If this one gets taken, why wouldn't it just take this one? At that point, why wouldn't it just take this one? You know? Then you can go see on the lower time frame how many of these actually provided a reaction. Oh, we hit this low. Did we reverse off of it? Nope. All right, we're likely to get a continuation lower. Oh, we just hit all of our targets. Cool. Right. What's the difference between bias and narrative? I don't really know, to be fair. It's the same thing. Is it going to go up or down? Where to? Like, I don't know. It's like, what's the difference between potato and potato? Pronunciation. If price after confirming a CISD doesn't retrace to the OB, nor any fair value gap, I missed the trade. What can I do to fix that? Well, that's a thing where a lot of people struggle. So let's talk about it. And just go to this, for example. So for instance, here is a, oh look, projections line up with the swings there. That's cool. All right, this I'm expecting price to expand away, right? Do I know if price closes over this? Yes, this isn't technically a CISD because there's no SMT or sweep here, but for the sake of an example, we're going to draw it in like it does. Cool, we have an SMT there as well. Great. We're coming up with things for an explanation. If price closes below here, and I'm expecting it to trade down here, this could be my entry at the retest. Let's say my stop's up there, or we can put it at the body, whatever. And there's my final target, 6R. That's great. Cool. Am I going to let 12 points keep me out of a trade like this? Or am I just going to take an entry at the market? That's what you have to decide. I prefer to just take my entry at the market and be in the trade, because good trades aren't really going to come retrace much, right? Maybe they tag it and go, but I would prefer to just be in it and then just let it go. A swing is not protected unless it hits a fair value gap. I have a whole video on protected swings, fair value gap, high or low. If 830, 930, 10 did not do anything, 1030 manipulation can be high probability. I've never heard that before. It's not something I've found in my study. Maybe it has found in your study. For me, if we have not done anything at 830, 930, or 10, that's usually meaning there's a lack of direction with price and we're consolidating, and I would prefer to just not lose money and go do something else with my day. So I just market buy it. Yeah, in this case I would market sell it, but yeah, that's the same. How do I determine average daily range? A lot of people will use math and indicators for that. I just go to my daily chart. I just look in here and I'm like, you know, how far is price going in here? 500 points. All right, cool. That can be my average range, 500 points. Oh, that one's only 400. We're decreasing some volatility. Up here, right, we had like smaller daily ranges, right? Like I'm just looking at the previous day's range and telling what the average daily range is. Here we get volatility, right? 500 points. 500 something points. Like I don't use any indicator to say, hey, if it goes 387 points, I'm at my average daily R, or average daily range. I'm just looking at it on the daily chart and saying, that makes sense to expand that far. Hey, T, is your T-spot a confluence or is it an important aspect of your model? It's an important aspect of my model. I'm having trouble with session times aligned with Nigeria time using the fractal model. Please enlighten me. Go down onto your chart, click this button right here, put it on New York time. It will become a lot easier. You sometimes trade Bitcoin? Not really. I used to trade quite a bit of options for Bitcoin, but I haven't really looked at it much. I talked about it with a friend here, and I just said if we respect the lower half of this wick, then we get a move lower. And I was looking for this area, but that's kind of it. Like I haven't really been watching it. I don't trade it currently, so. Can you explain daily bias for intraday? All I use is daily closures. Like if you want to make it super simple, look for daily closures. Look when we sweep and close back inside. Oh, right there. We sweep, we close back inside, I can be bearish. Right here. Does this one even have a change in the state of delivery? Doesn't look like it. No, so it's still bearish. Right? That one sweeps, you can see it's bearish. Opened first, let's see how it reacts at this high. Oh, that's not what you want to see. You don't want to see a sweep of a high and then a change in the state of delivery. Okay, now look, we swept this high, closed back in, bearish bias there. Right? Like, don't overcomplicate it, just use closures. If you use closures and just a basic understanding of the phases of price, it will be pretty simplified. If you have a bunch of stuff going on and a bunch of stuff charted, it'll probably be difficult. I saw someone today in the Discord being like marking every fair value gap, like every thing known to man in here, and I'm like, yeah, that's not going to help you. Just focus on the last like 2 or 3 days. How would you have traded this Wednesday? For NQ or ES? I don't think I didn't watch it because of FOMC. Didn't want to mess with it. But coming back to Wednesday, All right, just look at the daily chart. There's really not much there for me. Like, all you can really say is, okay, it swept out its previous day low. We have aggressive move lower, forms a candle 2 closure. Is it met with an aggressive move higher? Yeah. So then you could trade that continuation, but now we're over the highs. So it's just not interesting. So it's like, for me, there's just nothing really there for FOMC. I mean, the only one that makes a bit more sense is ES here, because you could possibly swing this into this high. You just have to be in somewhere to where you can get 2R to that high. Right, so unless I'm in somewhere around there, it doesn't make sense. Right? I have 5,000 drawdown, my direct funded account. How much should I risk? I have a video on that. If you just go to my position sizing video, I talk about that. Neither gold nor silver had swept lows closed back into the range. Why were they bullish? You guys pretend like I know it all. I don't know what's going on sometimes. Do I know why we left this low and reversed? No. We just formed a swing low. Like, I don't know why that move happened. That's not a move I'm going to catch. I already talked about that with USD JPY as well, and Euro. That's not something I'm going to catch. I know Garrett caught it. Not something I'll catch. I'll go beyond 2R, but that's my minimum. What's a good scalping strategy for small account? I don't know. You have to realize stop size. Scalping doesn't mean you have less exposure or drawdown. It's not what it means to scalp. It just means that you're on the lower time frames and you actually have more exposure to the market because you're going to be taking more trades, in my opinion. But I would just be using my fractal model on the 5-minute or 3-minute. I don't think the 1 minute is good for most people. For 50K, is it valid to have a 200 loss per trader idea or like 100? It depends on how aggressive or conservative you want to be with it. 1 second, I need a drink of water. Because if you're on an evaluation, you're just very aggressive. It's like almost full porting the trade. Versus if you're trading conservatively, then it's just like 7% of the drawdown. How do you handle trading at all-time highs as a target? I don't really change much. Like, yeah, we don't have anything to the left, but it's like I'm still trading the same stuff. Like, I'm just letting a swing form and then trading it. I prefer swings like this that then have a short-term target. Sweep, swing forms, short-term target. Swing forms, short-term target. Bit messy in here, but short-term target, swing forms, short-term target. That's what I prefer. But it doesn't really change much. Like, here, let me ask you this. Are you trading this a lot differently than this? Most of you probably aren't, but you're like psych-opping yourself into thinking so because we're over this high. Like, at the end of the day, nothing really changes that much. Most common reasons for stop outs. You're not letting the wick form and then trading the body. You're trying to catch the reversal. That's it. And funny enough, right after that question, can we trade the C2 if it's formed a CISD? Sure, but you're going to probably get more stop losses. Have you taken any stop losses this year? No, I've never lost all year. Yeah, I've lost trades. I don't have a 100% win rate. What in the world? What platform do I use to trade? Ninja Trader, and then I have 3 different brokers I use for options and that stuff. Let's see. My friend Leo is pulling up, so I need to. I'll stream until he pulls up at the train station, and I'm gonna go get him. What do we do when we enter at candle 3 and it doesn't expand, nor candle 4? That's kind of up to you. I prefer to be, if I'm in a trade, just accept that I'm in the trade, not try to mess with stuff. But you can manage how you see fit. Options don't, it's not that they provide less risk and easier to trade. I would actually say they're a bit more difficult to trade in some ways. And that it doesn't mean less risk, it just means your risk is more defined if you're holding it to 0. So what I mean is, like, we can just go to a options trade I took here. So I swung long options here, and I bought at the close. And here's the thing is, I bought somewhere in here. Let's say I'm buying this on futures. I need a 238 point stop. Okay, cool. Right, so that's my risk, right? I can define, let's say, we'll just give it a crazy scenario, right? Let's say price opens and I'm gapped down here, right? With some crazy news. Now I've lost this amount. My risk isn't as, it's not defined as much, right? Like I could lose more, right? Or that is my risk. With options, I can limit my downside completely, or not limit my downside, but I have a risk exposure that is capped, right? So for instance, I think when I bought these contracts, they were like $900 each, right? So that means if these could go all the way down here, and the most I'm going to lose is $900, right? And then let's say they recover, then I can be back in profit or whatever, right? So it just more so like, I use it as a way where I can just say, okay, this can do whatever it wants. That's my total risk into the trade. So my stop loss is a little bit, yes, for instance, on this, my stop loss would have been like a 40-50% loss. So I would have lost like $500 a contract, $450 a contract, if this would have been wrong. But does that kind of make sense? They're a bit more complex. You also have theta decay. So let's say, price just hangs around here for 10 days. Like, I'm probably going to lose 20-30% of those contracts value, right? Now, granted, I bought my expiration on these contracts were like end of June or July. So like they were a bit out. So that was decreased. But there's a lot more variables that go into it. I entered before kill zone and my stop loss hit, then straight to draw on liquidity. Well, likely it's not the kill zone that's the main problem. It's the fact that you didn't let the reversal actually form. Can you show a high probability daily bias on a daily candle closure? I mean, we're looking at one right here. We'll just remove the drawings. It traces into a fair value gap, closes here, and V-shaped reversal. That's high probability to me. That's why I put risk on it. That's it. Using the T-spot method, can I only use 2 time frames, hourly and M5? No, it's fractal. So for instance, we're here on the daily and hourly, and you'll see it is still marking out the T-spot. Let's say I go to the 4-hour, and we'll go to the 15 at that low, and you'll see right there. Right. There's another one, right? basically saying, once I closed over here, I want the wick to form in here. Oh, nice, I already did that. Then it expands away. Do you break even the trade? I try not to mess with it before 2R. I'll sometimes make decisions that I tend to mismanage if I try to go break even. How many people are in this stream? 100? If there's no SMT on a protected swing external range, can we still target internal range? Yeah. Personally, I don't need SMT. Can you go back to the daily on ES? Thursday closed above Wednesday, but okay, here's let's go. We're gonna talk about this because I see way too many people mess this up. You're saying you're really overthinking this. You're saying, hey, price closed above here. That's bullish. Let's look at it this way. Did price close above the high? No. Right? So sure, mechanically you could say this is bearish and bullish, just based off of a closure, nothing else. But let's take a look at this candle here. Is that a bullish candle or a bearish candle? That is a bearish candle. Does this is what the candle looks like. Does this look like a reversal? Let's go down to the hourly. Does this look like a bullish reversal right here? No, that's not bullish at all. Now let's go look at a different candle closure. Let's look at this one. This one closed like that. Is that bullish? Right? We could even draw this so it has the same scenario. Let's say it does this. Oh, it closed back inside this high. Is it bearish? No. You got to look at how it actually forms. Right? So it doesn't really make sense to me to say, hey, Thursday closed back inside the previous. Sure. But tell me, where is the bullish reversal in here? Where's the protected swing? There is none. You fell asleep? All right, well, if it's that boring, I can just end the stream. No, I don't tend to take partials prior to 2R. Do you wait for the hourly candle close to trade a 5-minute CIST? That is, yes, my model. There are ways to enter before that, but that's it. How to determine if my projections are on the wick or the body? I always use the wicks personally. Friday, 2 a.m., check the 1 hour, 5-minute on Euro. Euro USD, 2 a.m. on Friday. This is Friday. We will go to 2 a.m. There. We're gonna sweep this high and then make it. Okay. And trade's gonna look something like this. Nice. Let's go down to the 5-minute and see what it looks like. All right, let's just let the indicator print. We'll do there. This is nice. Why? Failure swings, right? There we go. We have all of our projections. Mark out those failure swings. What do we have? We have a retest and a fill of a fair value gap. Close below there. I can now short it. I stop there. I can look to target these lows or the projection is my final target. I don't know why it just did that, but whatever. There we go. Let's let it finish off the move. There we go. And we'll turn on the history so you can see it. But let's go mark out our protected swings. Right here, protected swing. Okay, sweeps out a high, protected swing, retraces into fair value gap, protected swing. Final projection, V-shape reversal. Let's see if we get a candle 3 closure. Yep. Now I wouldn't expect this low to get taken if we were to trend higher. We're into New York prior to NFP, but yeah, it does get taken, right? Because you're in waiting for NFP. But yeah, that's a good example. Please do a video about how candle closure to know the actual bias. So I have multiple videos on my channel going over that. So we'll not be making a video on that. Part 5 of my phases of price will be out. What is next weekend, the 6th? No, not the 6th, the 9th. Put it upside down. Do I still consider daily chart bias when entering on the 3-minute chart? Yeah. If you don't have some sort of bias, you're just going to pattern trade and lose a bunch. How many pairs do you recommend I watch? I'm not a beginner. I would stick with a couple to start. Trade Forex, just watch EU and GU. Dollar. You trade indices, NQ and ES. How do you mark out daily opening price on TradingView? I mean, there's a few ways you can do it. So for instance, if I'm here, just gonna exit this. I just have my indicator do that for me every day. Right, so if I just go to a day, it's gonna mark out our open. But all you do is if you want to do it very easily, you can just go. If you don't know what time it is, go to the daily chart, throw a vertical line on the day, go to the hourly, find that open, grab the opening price, mark it out. It's gonna be the easiest. If the CISD not confirmed by C2, but rather C2, that makes no sense. If it's not confirmed by C2, but rather C2, that's like a double negative, or what is that? It's not confirmed, but it is? We trade C3 the same day, or we wait for C3 to close and trade C4? Well, if there is no C2 closure, then I'm not looking to trade it. Rather C3? Well, if there's no C2 closure, I'm waiting for candle 3 to close. Can you talk about SMTs? Not so long ago, you said for a bearish, you trade the stronger or something like that. It depends. Like, sometimes there will be moments where, let's say this is weaker on the higher time frame, but on the lower time frame, we come up and sweep this high. Yes, it's technically the stronger on this lower time frame, but I'm bound to trade this one because it's the weaker on the higher time frame. Right, so then that's just like, take something like that or that. Right, I don't know what GU did. Oh, nice. I don't even have to draw the SMT. Cool example. We'll just say, for instance, let's say GBP is weaker, right? I prefer Euro's actually weaker on this move. But for instance, let's say GBP is weaker. It's taking out this high. This may be something I short on GBP, even though it took out the high, just because I anticipate it to catch up. Make sense? When to skip trading when I don't know what's going on. Right now I prefer to take my entries on the 15-minute time frame, just because I've been super busy with other projects. So it's a bit harder for me to be super focused intraday. So I just 15-minute gives me plenty of time. Are we bearish on silver? I mean, oh nice. Went and took all the lows. I mean, to me, we've had expansion, a little consolidation, expansion. Is this going to be a retracement or a consolidation? To me, I at least see this trading back into this area. Could it go trade lower? Sure. Then I need to wait for a swing up here. Like, everyone always tries to decide. This is what goes through a lot of people's mind, is they're saying, okay, I think it's going to go trade to here this month. It's going to do something like this, that. That's a great plan. Cool. What happens when it just drops? Like, why plan out 20 days of price action when you're trading the 5-minute chart? Just focus on the next day, what it's going to do. How do you frame your stops on the 15-minute time frame? I mean, sure, you can have wider stops, but you just adjust your position size. So for instance, let's say I'm trading the 15-minute time frame this day. Okay. Let's say I'm entering in here, putting my stop on this high. I have a 50-point stop. Cool. I'm just adjusting my position size, so that's my dollar risk that I need. Let's say I'm entering here and I have a 100-point stop. Well, if I have a 100-point stop, I better be anticipating a lot of range, because to get 2R, I need at least 200 points, which that can be the whole daily range sometimes. So, but I just adjust my position size. GBP, JPY, it's not going to be that fun, is it? It's been kind of fun. Because dollar consolidated, I think I talked about this on my live stream. That's 1 second. Yeah, 6J is just super strong. I just don't know why you wouldn't be trading USD JPY if you're looking at that, because this is going to have the more of the trending price action versus GBP JPY. Yes, it's trending, it's just going to be trending a little bit less with range. But either way, I mean, kind of the same thing. I'm not a huge fan after trading. Like, I don't like to trade after large bars like this. Then when you can get into some consolidation there. Wow, I just had an aneurysm speaking. So, how many instances of your indicator do you use for higher time frames? I mean, like on this one, right? Like that's a daily candle, and this is just one. If I'm doing something like this, that's 2 instances and then a daily candle. I just offset them. And what does this let me see? Oh, nice. It shows me that this has formed that higher time frame wick as well as this higher time frame wick. Let this wick form, trade the body, try to be entering near these opening prices. That's pretty close to the opening price. Then I can trade the body of this candle. So, all right, well, I think I'm gonna end the stream there. Hope you guys enjoyed. We'll maybe do a planned one when I'm back in the States, if we want. It's unlisted. You can share it if you want. The only way you'll be able to find this, it's not going to be up on my channel. You'll have to have the link. So we'll go ahead and end that there, though. I guess last things is, if you do want to check out the mentorship, you can check that out here. There is no current codes for it. If you want to check out the indicator, you can check that out here. Also, let me know if you like the new site, and then that's also a discount for 20% off today if you want it. And last plug is, if you do use prop firms and you want to sort through the best ones for you, and that's important, I'm going to make a video on talking about that, but you can use this site for code select for all the firms on the top right in that site. So we'll go ahead and end that there. If you guys need anything else, let me know, and I will see you guys next time. So have a good one.